Hello, everybody. Buffy the Rate Slayer here again, and we're back with the third episode of the May Weekly Market Insight series, coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company. The U.S. debt ceiling remained the biggest focus for investors this week. Investors are anticipating that U.S. politicians will be able to negotiate a solution to the debt ceiling standoff, with President Joe Biden voicing optimism that a deal could be reached. Traders are expecting the Federal Reserve will need to raise interest rates once again as inflation remains elevated. Also, Fed Bank of Dallas President Lori Logan said the case for a pause next month is not clear. Meanwhile, the Federal Reserve Bank of New York's General Business Conditions Index dropped 42.6 points to minus 31.8 this month. Any reading below zero indicates deteriorating conditions. So let's see what else is under the surface. So oil held steady as traders weighed a stronger dollar against comments by President Joe Biden, suggesting that the world's biggest economy will resolve its debt crises. West Texas Intermediate futures hovered below $73 after surging almost 3% on Wednesday, when Biden expressed confidence that negotiators would reach an agreement to avoid a catastrophic default. The gauge of the dollar rose to its highest since late March, helping to keep a lid on oil prices. U.S. retail sales increased in April, suggesting consumer spending is holding up in the face of economic headwinds, including inflation and high borrowing costs. The value of retail purchases rose 0.4% after an upwardly revised 0.7% decrease in March. Applications for U.S. unemployment benefits fell by the most since 2021 after fraudulent claims in at least one state boosted the numbers in previous weeks. Initial unemployment claims fell by 22,000 to 242,000 in the week ending May 13th. Mortgage applications to buy a home in the U.S. dropped last week as borrowing costs reached a two-month high. The mortgage applications index fell 5.7% in the week ending May 12th after rising 6.3% in the prior week. The MBA's index of applications for home purchases fell 4.8% to 165.4, the lowest level in a month. The refinances index fell 7.7% after rising 10% in the prior week. The recent volatility shows how sensitive buyer demand is and proportionate to the already high mortgage rates. U.S. mortgage starts increased in April, adding to evidence that residential real estate is gradually recovering after a year-long slump. Beginning home construction rose 2.2% to a 1.4 million annualized rate. Applications to build, a proxy for future construction, fell 1.5% to an annualized rate of 1.42 million units. Well, that's all we have for the week. Please join me again next week for more market updates. As always, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a great weekend. It's Friday. Buffy out.